So it's the day after all the CPI release from Thursday. It's Friday morning here, and I just want to run through the main suspects. So DXY, yields, and then the commodities with a big focus on gold, silver. I think the intraday moves were interesting, but it's always about the close. And I think the close was very different than the intraday, at least the instant move. And something I've noticed for a long time is as soon as you get any big release, the market will move one way and then it'll move the other. It's really interesting how it always happens, and you've got this arbitrage opportunity. But that aside, let's start with the DXY. You can see, I did mention how we were forced to venture outside this descending zone, which normally is a big breakout squeeze. My favorite chart pattern to play is this descending, but I think we were just forced to wait until Thursday, and therefore I didn't expect any massive squeeze until, Thursday or Friday. And obviously that squeeze on the upside only if it's, a positive reaction for the DXY. And what you can see is the real resistance, and I mentioned this also, was actually this area here, 102.6-ish. You can see the high from these candles, the high also here. And that's what happened. We ventured, this is the Thursday candle, we ventured above. If I just switch to the 3 minute, my favorite, you can see, here's this sort of one way and then the other, this retracement. We ventured above, but we didn't hold and we didn't close. Look where we closed, near the lows, and now we're trading here in the morning. And by the way, today, Friday, we have PPI, which could reverse the whole move, although the whole move has already been reversed. The point is, I think if we have a DXY positive number today, we will actually close above. I think we were kind of waiting for today. But if we have a negative number, I mean, a number which is negative for the DXY, that should do it. That should send us back down to this descending. And probably more importantly, the weekly candle will be a little bearish and we should continue lower next week. So in the end, it could be a positive for the gold and silver, and we'll get to that in a second. The point is, we closed below this 102.6 in the end, after all the initial, bullish move in the DXY, and that's very interesting. So it was good to see this horizontal act as resistance. It was also good for the commodities people to see the close so low of day, and I think it was biased to the downside for the DXY, which is always good for the commodity people. Let's look at yields. Pretty similar stuff, in initial, and sorry, again, the descending was taken out a while ago. I've removed them. That's how irrelevant the descending was. Look how far we took that. That was like over a week ago. We took it out. In the end, also the horizontal was resistance, and you can see here we failed to close above this. Really, not. Let me just extend it. And I think the 30 and the 10-year are the most important when it comes to this. But look, we popped our head above. But what happened yesterday? We closed lower than any of these other days. So also biased to the downside now. It's failed to take this out. We revisited prior support as resistance, and now expect us to go back down to basically 4%. 4% on the 30 and the 10-year. Very similar stuff, even more bearish. Look at that close at low of day. This morning we're just going sideways, but I expect a little drift lower. However, we have PPI, so let's see. If PPI ends up being positive for the DXY and yields, and they should be the same, we could end up closing, towards the high, like towards, let's say, 4.1%, for the 10-year. And if we go lower, then I expect, this area, roughly 3.8, low 3.8s to be support. So there you go. Those are the support and resistance for the yields, the main yields, the 10, the 30, and then the DXY. It's just interesting how they both had their horizontals very similar. The yields were more mature, but no one closed above their horizontal. And in the end, it was negative for yields and negative for the DXY, this reading of CPI, let's say. So let's wait for PPI. But if there's follow through, it's going to be good for commodities and bearish for yields and the DXY. Let's go straight to commodities. Copper, in the end, it's a strange candle because it was, up and down day. You can see it actually ended up a bit red. This is interesting. The markets, by the way, the overall reaction was down. You have to remember the markets were down yesterday. They did rally quite a bit off their lows, just as the yields and the DXY came down. But I think that explains why copper, even though the DXY was sort of down a lot, in the end, it was a red day. So let's see. Today it's rallying so far because I think there's some follow through from the late action. Let's wait for PPI. But in the end, if there's more of the same, we could end up having a bounce and revisiting the high 3.9s, let's say, or mid 3.9s, we could go all the way back up here to resistance. And then this would have been a perfectly choreographed low, let's say, because the chart coincides with the news. That always happens. So in the end, you have a very nice little support bounce and all the way back up. Let's see what happens with PPI, but this could just be more of the same, a bounce all the way back up. Natural gas, this one doesn't care. You know, I made a special effort to look at natural gas just the moments after the release of the data, and you know, all the charts are the same. DXY was going that way with the yields completely the same as DXY, markets going the other way, gold, silver, GDX. You know, I was looking at all the usual charts that I look at, and I looked at natural gas, and it was completely doing its own thing, didn't care, no reaction to the data, so it did not care. So what is it doing on its own? Well, it looks like it's just, you know, it had this big squeeze up here above 3, but it didn't close above 3. So actually, it retraced the whole move back down to 2 points. You know, I think this is not obvious, but I think it's correct resistance and support. So I'd say 2.75-ish. Don't want to say that's a round number, but you know, 3/4 of a whole point. And so we bounced off this 7.5 zone, and now we're probably going to test 3 again. And let's see if we can close above 3. If we close above 3, we start venturing up into the, I'm not sure, probably here, 3.35, which is crazy to retrace a whole move and some, you know, going below here, and then bounce this much and maybe even keep going. I mean, that's technically is very unlikely, and you know, but I think natural gas is just in its own world, doesn't care about any other of the, you know, the markets, the yields, the dollar, and doesn't really care about technical analysis, to be honest, to some extent. I mean, it does work, but it just, you know, overshoots and undershoots and all this stuff. So let's see. I think at least a close above 3 should react, should give it more upside. But I still think 3 should be resistance. Oil, that one was actually doing its own thing now. There are things going on in Yemen and the Middle East, you know, some escalations there. Some airstrikes in Yemen, that's not going to do much. I mean, think about all these Houthis, you know, all they got to do is send a couple of cheap drones, and our naval task force is completely out of ammo, and we can't refuel, we can't reload in the sea. We have to go to ports. I mean, you know, they send a couple thousand drones up in the air, and we're spending millions shooting them down. It's just a losing strategy. We don't have the supply lines. I mean, it's bankrupting us a lot more than them. So I don't think this is a strategy that can last. In the end, these guys can send thousands of missiles, thousands of drones, and we're going to be out of ammo very quickly, and it's going to be very expensive, and we just look like fools. So I see this escalation today and also yesterday as a bit of a boost, but I still think that it's, you know, the strategy is not going to work for us in the Middle East, at least what we're trying to do right now. So maybe it keeps going because if tensions are sending oil up, I think those tensions are going to continue because our reaction, and we're reacting to it, is not going to subdue the Houthis. So maybe we keep going up. But anyway, it's a catalyst for this move up, because normally you'd expect oil to go down with, you know, the dollar and yields going up and the market's going down. So they really should have gone down. Plus, commodities were just in lockstep going down yesterday, initially anyway. But oil didn't care. And to be honest, this looks really good. You know, higher lows ascending. And also look at these nice candles, which is closing. I just feel like we're going to go all the way up here. 76, we should find a bit of resistance. But if we close above here, if we close above 76, for me, we're going straight to 80. Straight to 80. You can see that, right? A close above here. It's the descending, my favorite pattern. It works. It works more than the others. Plus, you're closing above the horizontal, and we go there. Why there? Because that was a high last time. Plus, it's a big round number, 80. So I think oil is, I don't want to say easy, but this technically is very much in your favor. A test here, and then once you close above, move higher. If you were to go back down for some reason, I'm not sure, the tensions relax. Somehow Houthis agree. They're like, yeah, those missiles really hurt us. And they didn't do anything. It's kind of silly. But then I'd expect some support down here, 70s, just, you know, buying the dip style. Okay, uranium all the way back up. close at high of day, looking to test 30, looking to close above 30. Once that happens, up we go. I think it's 31.5. Yeah, this is just destined to go all the way up. It's just, I think this is the definition of climbing a wall of worry, just higher lows and soon to make a new higher high. This channel worked very well. And by the way, I never really cover uranium miners because it's just frustrating to watch what I'm missing. But look at them, they closed at new highs. So that's more reason. Look at that. That close is better than all the other close. It's done it already. So this should help. The miners are leading the metal in uranium. This is ideal bullishness. This is the perfect bullish. I mean, it's just going to go up even more. So uranium, that's why I covered URNM just now, the uranium miners, just to show you how uranium itself is really destined to go all the way up to 31.5. And then once it does that, then it's time to zoom out and say, okay, well, I would just say 38 right now, by the way, just from instant. Yeah, 38, that's the next level. And you know what? It's time to add it because uranium is moving fast and it's just so bullish that there you go, uranium. That's all I got to say. Well done, guys. Continuation. Platinum. Platinum. That overshot to the downside, but well, it should really reverse because I think there will be continuation with the DXY and yields down and it's just overdone it. This is the kind of chart where I do 15-minute zoom out and add the descending, and I would just wait for a close above this as confirmation, wherever that is. That would probably be about 9.3, just above 9.30 would probably do it, especially above this last high. That's extra confirmation. So 9.33 on platinum for me would mean more continuation. Palladium. Yeah, you see, I love this descending. You can see it took it out, retest, kept going. However, let's go to the daily. Sorry, this for me should really continue. This candle ruins it a little bit, but we know that yesterday was a special day. It's a bit like copper. It came back down again. This seesaw reaction. What I'd really want to see is a move above here, 1026, and then you can continue upside. This is crazy though. This really should bounce. But let's wait for PPI. But I really think it would move up a lot more. If it was to start closing below 970, then you're going to go back down to the lows. But I really wouldn't expect that. Gold. Okay, so this one, in the end, look at this ascending. It was perfect. This 2015 horizontal was also perfect. So I'm very happy with the only two trend lines I drew for support in this immediate zone. Really, that worked very well. So I'm very happy, and also 2015, very happy that that held on the horizontal basis. So we ventured a little below, but that's normal following news. If I go to the 3-minute chart, let's just see what happened. You can see this zone, this 2015 that I mentioned several times, it was a zone of buying. We dipped below, but we kept, we kept on having enough buying to go back up. So that was nice. Now let's, PPI. If we have PPI and it sends gold down, I think once you have a close below this Thursday candle, let's call it 2013, whatever it is, right? 2012, let's say. Then, yeah, you're looking for a flush and a move back down to 1975-ish. Forget 2000. That's, when people say 2000 is support, 1975 is included in 2000. We're talking about generally this zone, $50 zone around there being support. Even a move to 1940 if it held, which is not going to happen for like 2-3 weeks, I reckon. But if it was to go down, but if this holds and moves back up, that's still, when you zoom out and you're looking at the weekly, that still means 2000 is support. So, you've got to give some room there, some wiggle room. But for now, even better, support held above 2000, just here. It looks good. So if we close below 2012 and move to 1975, if, however, I think this is more likely, if we start to close above 2050, for sure 2050, but you know what? Let me zoom in. Let's just extend this ascending. If we were to close above, yeah, let's say 2050, but it's actually a little less. I think a move above this high here, 2046, because by then you've taken out this descending and you're closing above this. So I'm actually going to be more precise. A move above 20, a close above 2047 is enough for me to justify, with a bit more assurance that we should go back up to 2080. 2070, 2080, this general zone over here. And once you're up here, it's, the handle to a cup within the handle of a cup within, lots of multiple cup and handles. It just really should go to 2150. So today could be the day if gold goes up after PPI that guarantees, right, quotation marks, that we go all the way up, make new highs. This could be it. I just want to see a close above 2050. And I think that is quite realistic. So gold looks very good. Silver doesn't look as good, and that's kind of the usual situation with silver. Now, look at this horizontal. Beautiful, right? The ascending didn't work on silver, so I removed that a long time ago. You can see that again, that was a bit like yields in the dollar. The descending line in their cases was just, it didn't take into account the time we had to wait for the news. So the ascending didn't work, so I removed that. So in the end, I'm left with this horizontal low, and it touched it perfectly, a bit like 2015 in gold. So where do we close? We close not that great, but with silver, the bounce off the low was okay. Today we're just, holding some more. That's nice. If we close below 2250, and I did mention 2250 before, and obviously I added the line, but close below 2250, and silver is gonna go lower. And I don't think it'll go this low because that's not low enough. It's a move down to here, as long as gold closed below 2012 also. So if silver is below 2250 and gold below 2012, we should see silver go down to here and gold at 1975. If, however, gold's at 1950 or something and silver's above, let's say 2320, at least you'd expect more actually. Then maybe we go all the way up to 2450. We need this up here, we need it on the other side, on the upside. We need it just challenging this zone over here, just close above here. So we need silver to close probably at least above 2320, preferably above one of these tails. And then we can, next week early go up here. And I think if gold's testing 20,080, sorry, 2080, or 2100, it's not asking much for silver to be back here because we need to test 26. God damn it. Silver needs to move. And sometimes it has these moves. It has this little, okay, time to go up and catch up. And it's just, up 4 or 5%. And one of those days should come if gold starts to make another move. So silver's holding only just. These are the levels I'm looking at, but it needs to be up here now. Now let's look at the miners. GDXJ. This is another one where it was already holding support only just, and then the news came out. So as soon as you have this whipsaw, immediately the chart is damaged a little bit, and that's what happens. You can see we were trading Thursday already outside of this ascending only just. So what was good though is that we closed not below this horizontal. That was the minimum. That was the absolute minimum requirement, and we did that. It's not a great candle at all. It was a red day, but so are the markets, by the way. And something else I noticed, that the miners are underperforming the markets. They're following the markets, and they didn't follow the markets all the way up because the markets made new highs, but they're following them down, and that's not good to see. So underperforming equities overall. And I think overall gold has suffered from the attention of the markets. As the markets have gone up, some people, those general momentum chasers, or they've chased the markets rather than gold. And also Bitcoin's gone up and made new highs. So I think gold has suffered from that. So who knows, maybe that attention, we get it back as the markets. Well, it depends. Let's see what happens to the markets. But I think the markets are pretty damn overvalued. And I think Bitcoin, 48,000 was the level. I don't want to show you Bitcoin really too much, but you can see, we hit this 48,000 and it just happened to coincide with the ETF day. And look at this close. Bitcoin probably come all the way back down to here. So let's see if Bitcoin, a drop in Bitcoin just gives a little boost to gold. So I just think that may have happened. But anyway, the horizontal, we didn't close below it. So I'm going to just give a little more. I'm going to cheat and just do this. Okay, I could just remove it and just look at the horizontal. That might make sense actually at this point. I'll do that over the weekend, but you see what I mean? We didn't close below this horizontal. Next step, well, first of all, today, if we close, I'm going to do this. I'm going to do this now. Let's do this. If we don't close after PPI below here, below 34.5, then we still have a chance to resume the move up here. If we close above the high of Thursday, I'm going to say 35.75, preferably 36, by the way, we could go all the way back up here because that probably means gold's going back up to 2080. And I think the miners, especially if silver helps, have a chance of going all the way back up here. So that's GDXJ. And I think the others are the same. Let's look at GDX. Yeah, you see, it's time to remove this. It's just the time element. Okay, it's a shame I like ascendings. So here, likewise, we ventured here. We actually dipped our toes below or head, but we didn't close below this horizontal. And in the end, we closed up here. Okay, it would have been better if it was above 29, but doesn't matter. We closed at Wednesday's low of day. But anyway, we didn't take this out. So today, as long as we don't close below 28.50, we should be okay to possibly make an upward move. If we close above, let's say these two candles at least, let's call that 29.30, whatever it is, we can start venturing maybe all the way back up here again for the same reasons, because gold and silver are probably making bigger moves, especially gold. SILJ long losses ascending. So if I remove this for the others, definitely move it for here. Let's move this one down here. I think it just followed the chart of gold, silver, and the miners. So it's got its own kind of chart. It looks very similar. So let's not close below here. If we do, or we might as well visit here. That's probably the least we'll do. If we close above 940 on SILJ, we can start venturing all the way up here. Yeah, there you go. Look, it's a long video, but I try to go through it all quickly. Let's see Friday PPI, and then I'll make another weekend video. But I think that sums up what I'm looking at. But yeah, keep your eyes also on the markets and Bitcoin. I think they may be quite relevant if you're looking at the miners. And uranium, that's just frustrating. So well done, you uranium miner holders. Good luck.